Hey guys, Mike here. So another jam-packed video for you guys. A lot of news, stuff that came out over the holidays, over this weekend that you might not be aware of, and we're going to see how the market digests that Monday. So I'll go through that very quickly. But more importantly, I'm going to talk about also something that's been happening, and I thought it would stop by now, but it has not. And it has to do with, you'll hear people say this all the time, that in a down market or bear market, especially when you're coming out of it, there's going to be new leaders, new losers, right? And we're starting to see that, but it continues to go on. And it's kind of amazing to see how long this can go on for. And it's not something you probably think about, right? Because a lot of people in the tech, things like that, they return a lot of very high growth over a very short period of time. But that's not what you see happening right now, right? You see that's lagging, and we're getting a lot into that. And also something's going to happen this week that will probably shift markets one way or the other. We'll see how that goes. But I want to start off with this because, I'm not going to be surprised at this at all. I'm not going to waste my time digging into this mess. But I could easily prove it or not prove it just by going through the campaign contributions. But I saw this right here, and it says Congress members reportedly tried to stop the SEC's inquiry into FTX. That's the crypto exchange that imploded, per the prospect, with a March letter that questioned the SEC's authority to inquire about crypto and in part FTX. And then 5 of the 8 received campaign donations from the FTX employees, anywhere from $2,900 to $11,600. So that would not surprise me a bit. And again, you can actually verify this yourself if you want to, just by going to many websites to look at campaign contributions. The other one was, I just touched on this last week, was the White House to extend student loan repayment halt till June 30th. And of course, in the Discord, the big joke was, oh, you got to pay this back? Yeah, eventually you got to pay it back. And that's amazing that they would continue to do this. Here we are. You're trying to fight inflation, bring it down, all this other stuff. And what do they do? And what are we talking about? We're talking about millions of dollars every month that is not going to student loans. It's just going out into the market, right? To make it seem like things are better than they are in the economy. And that's what this is all about. This ain't about, let me help you out here. This is about, nope, average student loan payment is $300. Let's just keep that flowing into the economy, make everything look great, which, it's just not. And eventually you have to pay this back. It just has to be done that way, right? And so again, kicking the can down the road, here we go. Because remember, it wasn't just about all the free money we got from the government. It was about the fact you didn't have to pay rent or mortgages or car loans. You didn't have to pay anything for like a year. And now, how long can this go on for? It's just amazing, right? I mean, how far are they going to keep pushing this? Now, the reason why they push this, number one reason they did come out and say, which I almost figured this was going to happen in a way, I'm sure you did too, was a court in Texas, I believe, said you can't forgive student loan forgiveness. So I'm assuming this is going to go maybe to the Supreme Court. Who knows? And so, we'll see how that works out. But that's what they're trying to get done. And that's fine. But boy, it doesn't help Jerome Powell and his buddies when they're trying to bring down inflation, because this has been a major hit to people's pocketbooks for sure. And they just went, whatever, and so that's interesting. Let me know in the comments what you think about that. And this just came out yesterday, as a matter of fact. I always like to show it to you. The picture's worth 1,000 words. And I've discussed this before, you guys. I mean, this is the debt repayments at all-time highs, but more importantly, that one right there, repayment burden will rise as higher rates increasingly feed through. That is exactly what's going to continue to happen. As rates go up for companies, for business, everything, all the debt's going to get even harder to pay. And if we do have even a moderate recession, people start losing jobs, this is what's going to snowball, okay? So it's very important to understand that. And then, of course, there's China. Lord have mercy. I just touched on this last week about how I don't trust the government. I just wouldn't invest in them because they'll trade it. But I cannot put my money there long term because I don't trust a communist government, which seems to want to continue to take a wrecking ball to their economy for whatever reason. I don't know what the motive is behind that. Maybe you do. Let us know. But here's what's going on. This was very short-lived, right? That, they're going to give up on restrictions, no more lockdowns or anything, and the economy will start booming again.
It is looking increasingly as though the COVID situation here is becoming a national outbreak. Megacity Chongqing is now in effective lockdown. Chengdu, another city out west, which just emerged from a lockdown in September, has announced mass testing. Shanghai canceled an auto event, and then manufacturing and IT hub Shenzhen said that it's going to require a negative 48-hour COVID test as of Thursday, similar to what we're seeing here in Beijing. In fact, this all comes as Beijing and the surrounding areas have been imposing tighter restrictions. And as export hub Guangzhou continues to tighten its controls for some of the major districts.
And here's a great chart that just came out Friday, and it says catching big trends when it comes to China. And you can go through these and read all these you want to, but at the very bottom down there, you see reopening bets on the COVID pivot, right? And you see a huge pop. I showed you this last week, the charts. I mean, just massive moves in a lot of those stocks and stuff. But now, of course, you're seeing the opposite happen, which is, I mean, they're getting hit hard because here we go with the lockdowns again and all this other stuff. And again, I don't know. I just can't figure out. Everybody has a motive. These aren't idiots, okay? They're running it over there. So I can't figure out if it's just them wanting to, put their authority in place, stomp down the people and let them know we're in charge and we'll do whatever we want to do. And there's nothing you can do about it. I don't know. I don't live over there. Never been there. Let us know in the comments if you do and you got any input for us on this. And please don't forget to hit that like, subscribe button, and share this video, guys. And so we'll see how far that sell-off continues to happen, or if the market does what the market loves to do and put blinders on and say, no, we're still going to bet on it. We're still going to bet on it. Because remember, I showed you big money's been moving in, right, to this right here. And so we'll see. But getting back to what's going on with the United States economy, and more importantly, what's going on with Wall Street here, this is going to be a big week. And why is it going to be a big week? Because you see a lot of major support levels, trend lines, moving averages are going to be tested, and they're either going to be broken or they're going to get rejected. That's just the way it is, man. I don't know how we avoid it after this week. And you can see the Russell's what I'm going to start off with, because small caps, and I'll go into a more detailed video tomorrow about this, but because I've showed you this before, it has broken that 200 SMA on the daily and then end up crashing back down, right? And so we see it again, but more importantly, what's happening now, it's coming back to retest for a second time. You also have this trend line, for example, if you want to take the SMA off, that's going to be retested again on the weekly right here. So this week's going to be a big week for small caps, and a lot of people are betting on small caps because they've been beaten down more than anything else. And look at the S&P right here. I mean, look at all this stuff that's happening one time, right below the gap fill, right? Golden pocket, 200 SMA right there. Outer portion of this descending channel has been in all year long. They're all coming into one area, which can't remember seeing something like that before, but I'm sure it's happened. But that's an amazing thing to see this week, and it's going to have to play out this week. I don't see any other week that it's going to play out. I think it's going to happen. And to show you the contrast, you can see how tech just really hasn't been a huge beneficiary of this move up. When you look at it, it's basically trading sideways, and it's still about 6.5% below its 200 SMA, which actually take it outside the channel to even get to that golden pocket. And that leads us into something I'm surprised is still going on, but again, you never know what's going to happen in a bear market. And that leads us to the Dow. The Dow, Lord have mercy, this thing, and this is called, it's basically called your grandpa's index for a reason because of the kind of stocks it holds. I don't know if that still holds true, but that's what they called it for a long time. And you can see it already, tested this 200 SMA on the daily, broke through, got rejected, tested again, broke through, tested again, and now it's moved outside of its channel. It's moving into, it's been basically what people call a megaphone type pattern here, with like this widening channel to where it's actually moving up. And that's why people say it can continue to move up. But bring in the RSI and the MACD, you can see, boy, that MACD to me was like it wants to roll over. And the RSI is overbought, plain as day, and it's the Dow. So the Dow doesn't get overbought a tremendous amount of times, but when it does, it sells off. And if we go back a few other times, you can see what I'm talking about. I mean, anytime it even touches overbought, it sells off. And if you look at why the Dow keeps moving up, well, look at the top 10 holdings. It makes up 53% of the Dow. 10 stocks, right? And look at some of these. I know Goldman Sachs, man, everybody's waiting for this one to roll over because that thing, the financials keep moving up, right? Then you sit there with McDonald's. McDonald's keeps setting new 52-week high. Honeywell, Visa, Amgen, Boeing is a big one people are talking about. United Healthcare. And it's these companies that big money, they're rolling into. And that's what's moving them up. I mean, I saw something the other day. I can't remember the exact numbers, but like the 4 PEs of McDonald's and another one, like a restaurant chain or something, was almost where like Tesla is now. I mean, it's amazing to watch. Like, it's amazing to see that. But that's where big money has pushed these stocks up. How far they're going to go, I don't know. If there's going to be a rotation in 2023, or they just see these as being the winners and they're just prepping for a recession, maybe that's what they're trying to do here. And one big thing I'm watching, and I've done a whole detailed video on this for the members, is the Fear and Greed Index I like to follow. Right now it's at 73%, right? We get above 75, that's extreme greed. But if you look, this was the top of the last bear market rally. It called the exact top, and it was only like 83%. And this thing can get way higher than that. Right now we're sitting there where you see greed. That's all we're at. So we got room to run for sure. And even if we pull back, you can see you know, this thing is like anything else. Year to date, we ain't even been that high but twice, right? But if we even pull back even farther, a year, still hadn't been there. We go down the bottom here. I'm going to pull back to what is it, 2020. And you can see it can stay up there. It usually doesn't stay there very long, but above 75, it can get up there for a few weeks, right? Again, we all know the market can stay irrational long as you stay solvent, right? And so, but when it gets up to these levels, that's when I start paying attention. The last time I said, man, during the last bear market ride, I said, hey, boy, it's starting to get up pretty high, and then hit 84-ish, whatever, and then boom, there was the sell-off, right? And that just happened to me like right there at the top of the channel. And so that's what I'm watching for, because you can pretty much set your clock to it. As soon as we start getting in extreme greed, it may last a little while, but people are going to be pulling money, right? The smart money saying, I'm getting the heck out of here because it's starting to get overbought and stuff. And when that happens, it's just natural for the market to pull back. Where it will pull back to, I do not know, right? If it's just going to consolidate like the Dow did and then just start powering forward, and all of a sudden we're in a new bull market somehow, and in a high rate environment, in an environment we've never been able to pull a new bull market off in. You never know. And then the one thing this week, watch out for, because Papa Jerome will be speaking this week, 1:30 on Wednesday, which is a big thing. And I'm going to touch this real quick, because that's why, to me, you know, this came out, I think, Wednesday, and that's why a lot of the people hadn't pulled their short positions yet, right? They're still basically net short right now, because he is speaking this week. The last thing he wants is the market to start going on this crazy rally, and stocks and everything start roaring up, and yields start plowing down, and all this other crazy mess. He doesn't want that. It's not a good thing, especially if commodity prices start taking off again. And so, because they're trying to get inflation down, and so that, and you know, of course, with all these support levels and trend lines and moving averages being tested this week, why would you remove your shorts right now? It wouldn't make any sense. I mean, you just keep them on, and then if the market plows through them, you cover your shorts, right? Which, of course, what we'll do, that will move the market up even higher, and you go long, right? And so that's what a lot of people are doing. And I will say, you know, to end this, I was talking to my brother-in-law, who's a farmer, and his uncles are like really big farmers. They're these mega-type farmers. And, well, they were talking about all kinds of stuff, and we had a lot of conversations, but I let you guys privy to months ago about, you know, what's going to happen with the food supply next week, right? Or not next week, but next year. And would there be a shortage? Because a lot of people, because of the input costs for the diesel and all that stuff, they didn't plan as much as they normally would, because it didn't make any sense. They're going to be losing a lot of money if they do, because farmers don't set the price. Okay, and that's what you got to remember. They're not price setters. And so it's like he was telling me, with all these, even with commodities go through the roof and all this stuff goes up, the farmers aren't really benefiting at that at all. You know, it's the other people up the chain that will benefit. But like you see diesel, what's diesel been doing? It's been rising. That's a huge input for them, right? Fertilizer, all this other stuff. And so he was telling me, for those who are in the commodities, maybe you can help us out with this. Watch out for cotton, because and I'm reading an article right now, which I'll share with you guys later. But cotton right now is like 82 cents, and they were saying like the cost for the farmer themselves is like say $1 per acre, whatever it is, how they figure it out. But the cost is more than what they'll get for it if they plant it, and so they're not planting as much. And so I'm assuming cotton's used for a whole lot of stuff, right? So that means a lot of it won't be coming to market next year that you would have maybe like you had in 2021 or 2022. And we've seen that. He said you're going to see that play out next year with a lot of stuff, you know, whether it be corn or wheat or whatever it is. Right, that a lot of stuff just wasn't planning like it's supposed to be, because the input costs are just too much. Didn't make any sense for them to do it, you know, financially. And so 2023 is going to be a very interesting year because of that. But of course, there's a big bet on cotton right now, which I'm still trying to figure out, because they say there's no way it can stay 82 cents. It's going to have to be higher than that, right? So I don't know. I got to look into that. If you're into commodities, let me know, because I'm reading this article right now, but I was going to put it out there. I always like you guys' feedback. That's what I like to do on this channel. So anyway, hope you got something out of it. I'll hit you guys up. I got some good videos planned this week to try to catch us all up and get us into it and stuff. Again, if you want to sign up for the membership, hit it down below. Less than a McDonald's combo. A lot of people are enjoying that. A lot more trades and investment stuff are being put in there, which is what I've been wanting to do. So anyway, hope you guys have a good night. Hit the like, subscribe button if you got anything out of it. Really appreciate it, guys. And I'll see you tomorrow.